Everyone, hope you're doing well on this Sunday evening. We're going to be heading out to see a show tonight. If you haven't heard of Kamasi Washington and you like the saxophone, you should definitely check that out. So we have some action here on the shorter term time frames with a little dump just about the last hour. We'll look over that. First, want to give away another course. So if you want to comment on this recorded video, not in the live session right now, but comment on the recorded video and I'll pick another winner again. Did that last time. And certainly fun to see where everybody's from and, you know, all the nice messages. And I pick a random number and then scroll through the messages and then pick a winner. So we're going to do that again. So feel free to leave a comment. Any comment will do. And I'm going to point out those highs and lows. You hear me talk about highs and lows all the time. And I'm going to look into and explain that a little bit more in depth, how I'm finding those levels and how they stand out to me visually on the chart. Going to go over my trading style and what I've been doing today in terms of managing both the bullish action and now the bearish action. And then I'm going to go over the big three technical analysis as usual. And then I'm going to open it up to YouTube Live just to do some Q&A and interact with you guys that are on the YouTube Live and just answer some questions there. So want to start it off first with recognizing highs and lows. You hear me say it all the time, and I get a lot of questions about that in terms of, you know, describing more in depth how I find these levels and how they visually stand out to me. So this is Bitcoin on the hourly time frame. And when I'm looking for highs and lows, I'm looking at the max and the min. I'm looking for the range. So I don't care where the closes of the candlesticks are. I'm looking at the upper wick and the lower wick. So here on the hourly time frame, we have our previous all-time high, the dump down low. So there's our high and our low. From there, it's the point where the bulls make their move and they hit their maximum point, and then the bears say, okay, we're done going any higher. We're going to knock the price back down now. That's the highest that you're going to get. That's our new resistance level. So it was previously the high. Now we have a clear lower high, the highest point that the bulls could get to before the bears knocked the price back down. So that was 10,850. We then pull all the way back, and it's the exact opposite. It's the lowest point that the bears take the price before the bulls show up and say, okay, we're done going down now. We're heading back up. That's our new support level. And within these pullbacks, I can pick out more resistance levels if I want, but I'm just looking at the major highs and lows. If I wanted to pick out resistance, it's every area where the bulls attempted a bounce and then they rejected. The highest price here was 10,459. We had a bounce attempt here. The highest price was 10,209. That's where I'm finding support and resistance levels. In terms of support, it's the points where the bears took it down. The bull said, okay, we are done going down. That's our new higher low of support, 94.27, 95.17. And you can see we just get tighter and tighter until the clear break comes and we break the lower high pattern, increasing bull volume with it. And then we see the breakout follow. So it happens so often, and you hear me talking about it all the time, highs and lows, but being able to recognize them will absolutely change your trading significantly. And that was the biggest point and the biggest takeaway that I took with me from stocks into cryptocurrencies, recognizing price levels and recognizing when those levels break. And we had that with Bitcoin overnight. In the video I did yesterday, I said if we break if we break 11,100, we are very likely to see a new all-time high. And I drew this channel right here of this tight trading range. So why I can say that is because the only resistance we had at that point was 11,485 and 11,100. So I can confidently say to myself, if we're going to break 11,100, we're going to be $385 away from the all-time high. And the odds that we are unable to get through that level after a healthy sideways consolidation and a clear bull break with all the traders recognizing it, the odds that we are going to be unable to break to a new all-time high are low. So that would be an entry point. And I woke up this morning, rolled over in bed and reached for my phone and saw that we were still in this tight pattern. And I said, okay, we're still in a bullish uptrend. I'm entering right now. And I got in the low 11,100s and I placed my stop below this level of, let's see, where were we? I was looking at the 15-minute time frame this morning and it was right here. So I entered in the 11,100s and I said, I will exit if we break 11,100. So it was less than $100 risk if I were to get stopped out. And it was just to give me the opportunity of either a new all-time high. So the risk to reward ratio that I was calculating for that trade is if it goes according to plan and we get a bull break of 11,100, I'm looking for a $500 move minimum. And that's the $500 reward. In terms of risk, it was less than $100. So I have at least 5 to 1 risk, or 1 to 5 risk to reward in my favor. So it's a tight stop loss. It's knowing that the bulls are going to run with it if we get the break in the all-time high. So I entered that trade this morning, set my stop loss, and went back to sleep. And I woke up to new all-time highs and the ability to scale out. Now, on the way up, I was making trades of what I call taking insurance. Now, what I mean by that is I am leaving money on the table, so to speak, but I'm avoiding a move like this all-out dump that we just saw. And that all-out dump was potentially in relation to some fake FUD news that Korea's banning Bitcoin exchanges. Either way, there's no truth behind that. So now we're seeing a bounce play out. But my strategy was I initially started locking in profit for my initial trade up in the 11,500s and 11,600s. And then I would just enter. I entered on the break of 11,700. It was a clear multiple top as soon as we broke it. The thing is, when Bitcoin's in blue sky breakout at all-time highs, the resistance levels all aggregate around these psychological resistance numbers. So we see that and we reject from 11,700 or 11,000, that's right, 11,700, and we reject twice. So then as soon as we break it, the only resistance really we have is 11,800. So I was already all cashed at that point. I had locked in about a $400 to $500 move on the morning, and that was certainly plenty for me. And at that point, I was just scalping and quick flipping. So I bought the wall at 11,700 and flipped it in the upper 11,700s, in the 11,800 and 900s. And with fees, I was paying fees one way to buy into that momentum. It's not a huge gain. It's a small gain, but I'm just tacking it on piece by piece. And I was going to do the same thing if we broke 11,800. It didn't happen here, and then I left for the day. But it was just my way of exiting, taking insurance, meaning being all cash and not having to risk a stop out or a market order sell, and then just continually chipping away and adding small flips on the way up, knowing that when we pull back, it will be pretty significant. I wasn't expecting it to be this significant, but I was able to avoid the vast majority of this pullback by that insurance strategy, so to speak. Now, to play this bounce, I initially was in LTC, and I've been trading all of the big three today, but I was in LTC on the 5-minute time frame, and I got in a little bit late, so I was being extra cautious. I got in already after these 5-minute candlesticks started breaking out, so I got in the my average was the mid 106s, and we made a move up, and it looked like we were going to see a bull flag. This was healthy consolidation. It looked like Bitcoin was ready to go, and then all that fear struck, and everything dumped. So I was stopped out and took a red trade. That was my first red trade on the day, getting stopped out here. And then from there, I just took a step back and reanalyzed the situation and said, okay, we have a dump going on. I'm going to look to ETH. And I was just scrolling between all three of them to find some clues. And I've been finding a lot of laggard action where if you're watching Bitcoin, which is running the show, and we know the other three are correlated to it, you can find little clues. Bitcoin and Litecoin are more correlated than they are with Ethereum. To each other, they are. So I saw Bitcoin and Litecoin start making an initial oversold bounce right here. On Bitcoin, it was back here on the 5-minute time frame. The first initial bounce, it was a weak bounce. We had our low, high of the bounce, higher low, lower high, and then a clear all-out bear dump with increasing volume heading to lower lows. But the initial bounce, I was able to make an entry on ETH at 467 because Bitcoin and Litecoin had already significantly bounced at that point, and it was clear that their oversold bounce was starting. And at this point, ETH was still $1 off of its low of the pullback. So I just went market order all into ETH. And if we hit a new lower low, I would have exited. But we saw that bounce start to play out. I took a small amount of profit once we hit a $5 move to the upside. And then I was just sitting break even to see, okay, are we going to see a V-shaped recovery like we've been seeing in the past? I want to give myself the opportunity to, worst case scenario, see small profit. Best case scenario, we see new all-time highs and I have a nice position. So I ended up getting stopped out here as well for small profit. And then I take a step back. It's the same thing. I'm having insurance on my trade. I take a small loss, then I have all cash to be able to rebuy lower. And I did that again on Bitcoin now. I flipped over to Bitcoin and I bought Bitcoin down here and I was scaling in. Every time we hit a lower low, we get a flush of stops and that allows us to scale in. So I was entering in the 10,800s and I got filled partially, and then the bounce started and I didn't get all of my fills, so I then bought market order in the 10,900s, and then I was able to sell it a few $100s higher. So just to wrap up, that might be a little bit confusing, but on the way up for Bitcoin, I locked in my initial solid trade of profit. I then flipped short term, just locking in $50 gains on the way up a couple times, and kept cash knowing that we were a bit overextended. and not wanting to be caught up on a multiple $100 pullback. It ended up being a very significant pullback. I entered too early on the oversold bounce. I protected my trade, so I got out with a small amount of profit and was back to all cash to be able to rebuy again. And then I was able to scale out of this trade, and I'm back to all cash again after profiting a little bit and certainly ending up with a solid amount more profit than the small losses were on the way down. So here I am back to all cash again after profitable trades for the bulls in the morning, profitable oversold bounce trades, along with some losses in there. I'm not batting 1,000% here, but we don't need to if we're just controlling our losses, keeping them small, and not giving up on the trade. I would have kept doing that all night. If we drop $200 and then bounce, and then drop another $300, I would have gotten, stopped out for a small loss, stopped out for a small loss. Eventually, we're going to hit a bottom, and then there's going to be a very significant bounce, and it's going to be very easy to make back all of those small losses once that oversold bounce gets in. So if you take a $100 loss, which is still a pretty solid amount, I take less than $100 losses on my oversold bounce misses, but even if you did, and you took, $200 of loss, we just bounced $900, $800. So it's very easy once the bottom is in to make back small losses. So where I stand right now, let's zoom out and do some analysis where we have big upper wicks on these daily time frames. And that's showing us this profit taking. And the question as we head into overnight tonight is going to be, are the bulls going to buy the dip like they always do? And we have to note, look how different Ethereum is. Ethereum didn't come close to its all-time high. Litecoin hit its all-time high first. Bitcoin hit its all-time high second. So it's very clear that those two names are more correlated to each other. And Ethereum's definitely correlated to Bitcoin, but it's doing its own thing to a certain degree. So we have an equilibrium pattern potentially setting up on Ethereum with our all-time high, the low of the dump, and this might be our lower high now at 483.61. So we're going to be watching for Ethereum to continue to tighten up on this daily time frame. And if we do end up continuing to consolidate from here, we will be looking for a higher low on the daily time frame to be established compared to 401.50. That's looking a little bit ahead. So Bitcoin, same thing, big upper wick, showing profit taking. We zoom into the 4-hour time frame. We see that, stair steps up, elevator down. In one 4-hour candlestick, we took out about 12 4-hour candlesticks of bullish action. So we did find a support level at 10,601. We took out support. So we have to be cautious. That's our new must-hold support level. A break of that level means the daily chart is in consolidation mode. We're now looking at the hourly time frame. Can the bulls turn this around with our low of the bounce, high of the bounce, higher low, and higher high? We're going to be watching the MACDs again. Can we get a bullish hourly MACD cross showing that the bulls are recovering from here? So at this point, I'm just cycling around the time frames. I say the 15-minute time frames are a really good time frame to get a picture of what's going on right now. We have the all-out dump. It's clear to see where the high of the bounce from that dump is, and now we have a tightening range establishing. And we're going to be watching equilibrium patterns. And if you were watching the equilibrium patterns on the 5-minute time frame on the dump down and on the oversold bounce attempts, there were multiple times where they had clear signals. Let's look at that. So like I pointed out earlier, Bitcoin had the low, high of the bounce, higher low, inside bar, inside bar, inside bar, bear break and dump. We then had another little bit of an equilibrium pattern where we actually got a flush down to a low, and that was actually a bit of a fake out. So that's a good example where we had another low, the high of the bounce, higher low, real tight range, and then a final flush before the bulls took over. And the bulls really proved themselves on this secondary bounce once they were able to get the high of the previous bounce and break it that could not break initially. So that's 11,268 because we then break the lower high pattern. And when we break a lower high pattern, we then look for the bulls to initiate forming higher lows and higher highs and reversing the trend in their favor. So where we stand right now in this moment, the 15-minute time frame is your friend. If we hold 11,110, we know the odds of the bulls recovering further on this bounce are pretty high. If we break that level, we are going to head back down into the upper $10,000 range, and it will be up to the bulls to form a higher low compared to $10,601, which was our low down here. So we're looking for the 15-minute time frame to tighten up. I personally am going to remain all cash until we see a break of this tightening 15-minute pattern, and I don't anticipate that to happen anytime soon. That could take 3-4 hours to play out. It could take 1 hour to play out, but I do anticipate to pull back a little bit more and to tighten up. Looking at Ethereum, it's the same thing. We're on the hourly time frame or the 4-hour time frame. We took out a bunch of upside on the hourly time frame, bullish reversal candlestick is forming, but the 15-minute time frame has the most clear view where we can see the clear high of the top of the bounce. And now we're pulling back and the bulls are looking to form a higher low on the 15-minute time frame. So 450 is psychological support, 467.97 is the top of the bounce resistance, and we're looking for a higher low to form comparative to 450. Normally, I could make an entry scaling in just a visual aspect of things, saying, okay, if we're going to form a higher low and form this equilibrium pattern, I can be looking to start scaling into the upper 450s, and I'll have my stop below 450 if we break that level. I want to be out of the trade. So if we see declining bear volume, no red flags with volume, that's a potential play where you can scale in, anticipating the tightening equilibrium pattern. You have a clear stop level to be utilizing, the low of the dump, and you are looking for the range to continue tighten, and you're looking for a bull break of that equilibrium pattern. If you want to be more cautious and not try and buy into some bear momentum, you're waiting for the equilibrium pattern to play out, get really tight, and then give a clear break. If it's a bull break, you're going to have to use a market order to get in because everybody else is going to be getting in. And if it's a bear break, you know to back off and potentially play those oversold bounces again. So where we stand on Litecoin, very similar. 4-hour time frame, big time dump, taking out all kinds of levels. The hourly time frame, inside bar forming. 15-minute time frame shows the bounce the best, where we have our low of support established down here at $97. The high of the bounce is up here at 102.80, and we're looking for a higher low to be established compared to $97. No matter what of the big three you are trading, you need to be watching Bitcoin as well. It will give you clues, I promise. I cannot tell you how many times I get a 10 to 20 second heads up by a move that Bitcoin makes, and then I see the exact same move appear on Litecoin. A lot of traders are doing this, not just me, where they are making decisions based on the Bitcoin chart because the correlation is so strong. So you have to be watching that as well, and you will get clues. Like I said, that Ethereum bounce initially was a laggard bounce, and that allowed for an entry, and then, you know, a $6, $7 move to the upside, where the other names had already significantly bounced about 30 seconds sooner. So where we stand, tightening pattern, no rush to get into anything for me. If you are in a position, there's no rush to exit. You would want to exit if we are going to break this equilibrium bearish, but we are going to form a higher low on this 15-minute time frame unless we see an all-out dump and a spike in bear volume. So I'm very confident that a higher low is coming on all three of these 15-minute charts. We will then look for a lower high and a break sometime in the next few hours. And that's where we stand. So let's see, give away the course. If you put your comment on the recorded video, I will choose somebody. Pointed out some of the highs and the lows, my trading style, big three, technical analysis. Just want to touch base again on the alert system, having the 15-minute inside or the 15-minute RSI levels going off. We're getting these scenarios again where we're double dipping. So we're getting bear price shears letting us know the price is dumping. We're getting 15-minute oversold RSI indications, and we touched it very briefly, a short-term bounce, and then we flushed under it again. So sometimes holding off, being more cautious, and waiting for that second double dip in the 15-minute RSI will be more profitable. I personally go for the first dip, and then, like I said, I'll stop out for a small loss and then re-enter at a lower price, knowing that when the bounce does occur, that small loss will be made back fairly quickly. So keeping an eye on the declining volume pattern. We're close to getting a 15-minute bull MACD cross. Look at these inside bars. We just had a 15-minute inside bar break bearish, letting us know we're going to pull back and likely form our higher low. And we're going to be utilizing, if you're using this alert system, utilize the hourly inside bars. We are going to form hourly inside bars right now on Bitcoin and on Litecoin. Not so much on Ethereum because it broke to a higher high on this hourly candlestick. But if you're trading Bitcoin and Litecoin, put these hourly inside bar alerts on, and they'll let you know whether this bounce is going to see continuation with a bull break of the inside bar, or whether we're going to head back down to the lows of this dump with a bear break of the inside bar. So the alert system certainly coming in handy on these kind of dumps in terms of my game plan going forward, because like I said, when I'm going out tonight to go to this show, Kamasi Washington, check him out on the saxophone, I will be preoccupied, and I'm not going to be watching this chart. But if I get an alert that we're getting a hourly inside bar bear break, then I'm going to know that we're heading back down to the lows, and I'm going to know there's going to be another oversold bounce opportunity potentially awaiting me when I get home, or I'll have my phone, and if I'm really inclined, I'll be able to make a trade from my phone, but that's unlikely just because I really don't like trading from my phone. I want to have all of my tools accessible to me, and not force anything, I would almost rather just miss a trade than try and trade off my phone, because it really is putting you at a disadvantage already in a game that is hard enough as it is. So now I'm going to open it up to YouTube Live and look in at you guys and see what you got in terms of questions. Q&A, let's do it, Shannon. So 15-minute higher lows. If you're in a position, you have to anticipate that we're going to pull back a little bit. Personally, I would not be exiting into Tether. It's too uncertain for me. I'm using GDAX because of the FDIC insurance. I would find an alternative to trading Tether. If my only option was trading Tether, I would not be trading with nearly as much capital. Probably 10% as much capital, in all honesty, if I could not be going into US dollars. I don't believe it is I do believe it is a temporary top, but we see how short these temporary tops last. The last one only lasted a couple of days, so it doesn't mean a whole lot. Temporary is certainly relative, and we are not going to see a new all-time high tonight, but, you know, maybe in 2 days we will. I don't think it's a bearish descending triangle pattern forming. A descending triangle, you need a horizontal base of support with multiple touches. We only have one touch down at the lows, and it's going to be a clear equilibrium pattern. I'm very confident just because of how many times this pattern has played out. It's got the perfect setup for it right now, and the declining volume really makes me confident that that's what we're going to see right now. So it would only be a descending triangle pattern if we had multiple touches at the low. Again, if you're just determining whether you want to be entering or exiting right now, I wouldn't be doing anything. I would be waiting patiently for the break of the equilibrium pattern that's currently forming. And if it's a bull break, you're holding bull positions or you're entering bull positions. If it's a bear break, you are exiting bull positions and shorting or patiently waiting for an oversold bounce. So again, within the next half an hour to 45 minutes, we are going to form a higher low on this 15-minute time frame. And we are going to see the range tighten up and give us a clear break sometime within the next 2 to 3 hours. So I would not, if you have not made a decision right now and you're wondering what to do, you're using this 15-minute equilibrium pattern that's setting up. In terms of, I see a lot of people wanting me to predict stuff, and it's just not what I do. I'm not going to try and predict what the price is going to be in 3 months. I take it every single day, one day at a time. And I am being very cautious and protective, not trying to spoil an insane year of gains. And if we're going to keep going up, I'm going to keep riding this momentum. If we're going to keep going down, I'm going to be playing oversold bounces and patiently waiting. There's no need for me to predict what's going to happen in 3 months because I will be playing it every single day and be able to recognize one day to the next what is more likely in the near-term future. So as of right now, it's still all bull. There is nothing that is taking away from the bulls. We can see multiple days of downside and still be completely healthy. So as far as, you know, these targets, people putting out targets for Bitcoin, I'm never, ever going to do that. There's no need for me to do that. It's just a guess. My guess is not going to be any better than anybody else's. I'm just going to trade it one day at a time and continue to lock in that profit as long as the opportunity is there. The reason ETH is lagging behind is because the money is, you have something that I call a funnel effect, where when we have one name at Blue Sky Breakout, that's where the money goes. That's where most of the attention goes, and that's where the traders want to be. So when you have all of the names at Blue Sky Breakout, it's a little bit of a different scenario, and that funnel effect isn't there, and it opens it up in terms of, you know, people are going to spread their money out if they can go into Litecoin at all-time highs or Bitcoin at all-time highs or Ethereum. But the fact that Litecoin hit all-time highs first last night, we put out the video that was very clear. Litecoin takes the lead, and then it hit the all-time high first. That tells me Bitcoin is more likely to hit the new all-time high next, and that is because the Litecoin and Bitcoin correlation is stronger with each other. Once Bitcoin hit its new all-time high with Litecoin, then the traders are focused on those two names. And if Ethereum loses a little bit of the limelight because it's not in Blue Sky Breakout, it has multiple percent to go. And if you saw the video I did yesterday, it was very clear where it was Bitcoin and Litecoin were something like 4% away from an all-time high, and Ethereum was much more significant in terms of the amount of action the bulls would need to see to get to that all-time high. So it's just a slow a slight lag, but once you get to blue sky breakout with those other names and Ethereum is not at blue sky breakout, it gets magnified because that's where traders want to be due to the lack of resistance. Favorite time frame for MACD on day trades? Probably the 15-minute time frame. Favorite MACD cross overall is always the 4-hour time frame. I like the hourly for day trade signals if they come, but really the 15-minute time frame for short-term signals is a pretty good signal. But keep in mind the MACD is a lagging indicator. So I use that as a confirmation. I use the price levels, the RSI, the volume. I use those all more than the MACD. Usually I'm already in a trade and the MACD crosses and then I get a little bit more confident in that trade. Very, very rarely. In fact, I can say never. I will never enter a trade solely on the MACD. It's always the MACD along with a bunch of other reasons for getting into the trade. So I definitely view MACD as a secondary indicator. RSI, volume, and price action, excuse me, those three are all more important to me than the MACD cross itself. But it is nice to have in conjunction with everything else. So look at all these names right now in the 15-minute time frame. It looks like our higher low has just been established. It happened a lot sooner than anticipated. So a higher low is now established on Ethereum, Bitcoin, and Litecoin, and the range continues to tighten. So the range right now on Bitcoin is support of 11,101. Resistance is 11,450. For Ethereum, 461.50 support, 467.97 resistance. Litecoin, 116 support, 102.80 resistance. Whichever one of those levels breaks first is going to dictate momentum into tonight. Taxes, I'm going to pay a lot of taxes this year. I'm going to pay over 1/3 of my profits in taxes. It's going to be a huge hit. And someone pointed that out in my video where I've given my percentage gains and compared it to where we would need to be for the market to have those same numbers. And they made a good point. Well, take out your short-term tax gains and then do it, which I did. Take out 1/3 of the profit I made this year and still beating the market. Bitcoin would have to be 14,000s, Ethereum would have to be 600s, and Litecoin would have to be in the mid 200s. And that's not factoring in the 15% tax that anybody that's holding any kind of cryptocurrency is going to incur in terms of long-term trades. But yes, I'm going to have a very significant tax bill. It was the reason I was going to move to Puerto Rico in 2017, because there you can avoid capital gains taxes if you are a resident in Puerto Rico for 6 months. Then the hurricane happened and destroyed all the infrastructure and everything, so that flew out the window. But it's just a part of the game that I accept as a stock trader. I'm very, very used to capital gains taxes, and it's just a part of the game. And as long as we're coming out ahead after those capital gains, that is the goal. Potential manipulation with CME futures. There's definitely going to be a lot more big money involved. If the stock market is opening things up, I think we're going to see an initial surge. It's going to work in both ways. We're going to see an initial surge when the bulls initially start to buy in and say, oh, we finally have our chance to buy Bitcoin. And then they're going to have to back up, the purchases of the futures with actual Bitcoin. And it's going to go up. But in conditions where things are very toppy, it's going to be easy for these institutional traders, it's going to be easy for them to knock down the price, in my opinion, due to, once we get to very overbought conditions, they can start to signal with their trades. There's going to be more signals now. We can look at the futures action, see what's being bought, and if we see big money loading up on bearish positions when we're overextended, we can be more confident that a short-term pullback is going to be coming. So it's going to add it's going to open things up very significantly. I think it's inevitable for this space. Again, in terms of predicting what's going to happen, we're going to have to wait and see how the market is affected by it and see if the stock market bulls are going to run with it. In my opinion, the stock market has more money to make bullish due to the lack of resistance, the hype, the blue sky breakout. They have more money to make bullish than they do bearish. They're fighting a world of population and a world of a cult, essentially. Cryptocurrency has a cult mentality, just the way that Tesla has a cult mentality in terms of its stock followers with cryptocurrency followers. It's going to be easier for the bulls to make money on the way up. And once we see mainstream adoption and, average Joe and Jane getting their Bitcoin and things slowing down with Coinbase not seeing 50,000 new accounts a day, then it's going to be much easier for them to dump the price because the buying pressure and everybody looking to buy the dips is not going to be as significant. So I think it will be bullish initially, and then I think it will be utilized bearish once we see things slow down and once we see the cryptocurrency space chill out. Again, it's not going to do this for the next decade. We are going to have periods of long-term consolidation. It just hasn't happened yet. And it's going to take fundamental innovation by Ethereum and all these other altcoins to continue the hype and continue giving reasons for people to want to buy in. So I think it's going to overall be initially a good thing. And again, it's not going to change. We're going to keep seeing ETHs, or ETFs, I should say. We're going to see more trading vehicles. We're going to see more acceptance. We're going to see brokers like Fidelity integrating it into their platform. These are all good things, as it means more big money is going to have access to trading the space. And if you've been watching the videos that I put out on these blockchain stocks, the market wants to play cryptocurrency. These blockchain stocks are running 500%. They're extremely volatile. There's a lot of trading going on. There's a lot of money moving around. The market wants to trade cryptocurrency, and it's going to be initially bullish because no one's going to want to fight this trend right out of the gate. Trying to catch up here. $100. If you're going to start with $100, you would only want to use limit orders to not incur fees, and you would want to just practice. And I suggest that. I would absolutely suggest coming on with a small amount of capital, perhaps going long in positions with 90% of your capital and trading with 10% as you learn, fully accepting you're going to lose that 10%. And if you go break even, I always say, if you go break even when you're learning technical analysis, you're a winner and you just got free education and free experience. So keep it small. Do not trade with your stack if you're just learning out. And that will get you confident going forward in terms of being able to increase your capital and getting a better feel for things. As far as I'm concerned, Bitcoin Cash is a conspiracy at this point. There's no flippening in sight. You know, the whole Dragon Slayer thing, I just tune out drama. You don't need to listen to any fundamental drama when you have charts. If it was very clear that we were not seeing Bitcoin Cash become the new Bitcoin on November 28th, like the rumors were stating, all you have to do is look at the chart and say, okay, that's not happening. I'm not going to put any time or effort into that. As far as I'm concerned right now, just watching the trading action of Bitcoin Cash, it's for short-term traders. There's definitely some people holding long, but it's not anywhere near the kind of powerful bull moves that we're seeing in these other names. And it looks like, you know, just short-term pops and flips. Anytime you exit money into fiat, you're going to owe taxes. If your tax bracket is under $10,000 profit on the year, you won't. But if you are doing anything in terms of buying and going into fiat, that is a taxable transaction. And you will owe the amount of capital gains. It's the same, your capital gains tax rate is the same as your tax bracket. So if you're in the 15% tax bracket, you owe 15% on your capital gains, even if they're short term. And you find out your tax bracket by adding up your income with your capital gains. CME futures, definitely there's going to be people shorting Bitcoin. But like I said, I don't think it's going to happen initially. I think we're going to have some more euphoria when the market floodgates open to the stock world initially. People use descending triangles using the real bodies of the candlesticks as well. Personally, I use the wicks. If there's a lot of candlesticks in a general area, I will use the real bodies. But normally, I mean, it's really preference. For example, right here on this support line, if I'm using real bodies, I'm getting multiple touches here. If I put it down at the base of the candlestick, there's only one touch. So for the stop loss level, I would use, you know, the low of the candlestick and want to be just under that. But in terms of watching a pattern play out and a support line to be keeping an eye on, you can put it in either place and that's fine. It's all about preference. As long as you stay consistent with either using wicks or real bodies, that's all that matters. Yes, moving to fiat in GDAX counts as capital gains, and yes, you subtract the negative trades. It's only what you end up, what you get taxed on. I do not know the news on crypto to crypto trade taxes. You need to consult a professional for that. I don't think we're going to have a massive correction soon. The massive corrections have already happened. I mean, we had a massive correction from, let's go back to Bitcoin, a massive correction from up at, 11,485 down to 8,500. That is a massive correction. It just happened in a span of 6 hours. So normally, if this were a stock, I would look for that kind of consolidation to take place over weeks. Everything is accelerated in the cryptocurrency space. I've only started going all in on my trades this year in terms of being confident, being on a hot streak, recognizing the market environment for Canadian MJ. I'm doing the exact same strategy for Canadian MJ as I'm doing with crypto, and I'm having similar results, where it's just the confidence, knowing you're in an extremely bull market. And I can't state confidence enough. The fact that you get so many winning trades in a bull market, you're just on fire. I don't fear a losing trade at all. I'm just going for it aggressively. I'm always protecting my trades, and that is allowing me in a very bull market to continually capitalize on the bullish action by not fearing getting into trades whatsoever, because I know any losing trade that I get, I can very easily make it right back, probably within a few hours. So in terms of how long did I practice, I was practicing, I looked at technical analysis for 4 months, day in and day out, every single day, full-time job before I started doing anything. So that was 4 whole months. Then I started trading with lower capital. I've been building up capital for 8 years now, and just compounding profits this year has taken everything to the next level, obviously with the bullish market that we've seen. So I would say at a bare minimum, 4 months of very committed, motivating studying. And if you can't put in 6 hours of studying a day, if you have a job, it's going to take longer than that. It might take you a year before you have charts down. So it pays off to either be in long positions or just preserve your capital until you're ready and confident before you start trading. I trade the Canadian MJ stocks, the US version, so I don't have to pay currency conversions. So I trade TWMJF and ACBFF. For learning how to pay taxes on your trades, just look up capital gains taxes, because that's what it is, essentially. And if it's all short term, you're just subtracting your losers from your winners, and then you pay your income tax bracket. Honestly, the smartest thing that I did recently, I always did my own taxes. Pay someone to do your taxes. It makes life so much easier. They find loopholes and ways to save you money. My buddy had his own business, and he said, all right, it's finally time to pay a real person to do our taxes. He saved $14,000 that year because they found all these different things that they could do in terms of benefiting. So it's entirely possible that paying for someone to do your taxes will pay for itself and give you profit under certain conditions. So it's always better safe than sorry. And I'm really looking forward to not looking at my taxes at all this year and passing it off to somebody else. And everybody always asks, how much money can I expect to make day trading? What's a percentage gain? How much should I start with? These are all questions that can never have an answer. Everybody is so individually different. The market we're seeing in 2017, I have never seen before, and I don't think we'll ever see it again in terms of the amount gains that we're seeing. So if we're looking at this market in this small window of time and saying, well, I'm making 15% a month, so I'm going to look to do that for the next 5 years. That's a very foolish thing to do, because these conditions are not going to keep up. My trading style in the last 8 years has been conservatively trading options in the real market, Facebook options, Tesla, Netflix, very conservative, small amounts of money, making a couple $100s a day or whatever my goal is. And then when these opportunities like USMJ in 2013, Canadian MJ in 2016 and 2017, cryptocurrency in 2017, when these opportunities come along, I smash them with everything I have, because I know that they're not going to last. And that's my style, being very conservative when things are tight and there's not a lot of action and there's not a ton of gains to be seen. And then when the market shifts to very bullish environments, just absolutely going all out. And that's why I'm doing this strategy of all in. If you asked me last year, are you going to be going all in all your trades? I would say absolutely not. That's very foolish to do. But this is a market environment that I could not have foreseen, and it has completely shifted my trading style. And that is what I'm sticking with for now. Eventually, when we are not in as bullish a market, I'm going to end up losing a bit. I'm going to lose a few times before I make the adjustment and realize, okay, this isn't the same market that we've been in. I have to adjust my game plan, and I can't be doing the same all-in kind of trades that I've been doing all year. I don't like that statistic at all. 90% of traders lose money. It's such a broad-based statistic. 90% of traders that I come across start trading without doing anything to educate themselves. Of course they're going to lose. I mean, how many surgeons fail before they go to medical school compared to how many surgeons fail after going to medical school? There's so many different ways you could look at that stat. Just that general stat, I really dislike it because it doesn't tell you anything about the time and effort that the person has put in. If you put in a week of effort, you're going to lose. If you put in a year of effort, your odds of losing are significantly reduced. I've been advocating long positions in Canadian MJ stocks for the last 6 months. I love trading it, and I absolutely suggest long positions for the next 5 to 10 years. I use GDAX, and I'm very happy with it. Everybody hates Kraken. If you're on Kraken, I've never heard anything good about it. Cowboy, check out the video, How to Draw Trend Lines on our Trading Lessons playlist. For altcoins, I've got my long position in Golem, whatever you want to call it. And I'm not touching it. It's had a nice move the last couple of weeks. I'm long, and I'm waiting, holding out to see if it gets added to Coinbase. If it does, that's great. If it doesn't, I'll deal with it then. It's an all-profit position. I will begin trading altcoins. Once they're added to Coinbase, it's going to open the doors wide open for more profit potential, and I'm looking forward to that. I'll trade whatever they add to Coinbase, but I'm sticking to Coinbase due to the FDIC insurance. TradingView.com is this charting service. Best exchange for the Canadians. Bittrex and Bitfinex are always the most common. Do not trade margin if you are learning technical analysis, plain and simple. I have yet to trade margin ever in the cryptocurrency space, and I haven't needed to. If you're compounding your profits, they can add up very quickly. Over 1,000% without using any margin is pretty wild. I will use it in stocks very infrequently if I'm very confident on a clear break. And if I am using margin, it's only on a day trade scalp. And I get back under the margin level and get back to where my cash can cover it sooner rather than later. The horror stories of people getting stuck in margin trading is very unfortunate. I personally would not be using Bitfinex because of Tether. It's just my cautious nature. I would not expose myself to that risk. Checking back on these 15-minute patterns, continuing to tighten up. 15-minute is the time frame to be watching. BTC, that's enough of a pullback from that bull move up that I will consider that a level. 11,383, I will consider that a lower high as it continues to tighten. It's a clear point where the bulls bounced and were rejected and we started pulling back again. Absolutely, you should do our courses before the alert system. The alert system doesn't say buy now. It shows you things on the chart. If you are fluent or learning technical analysis, you can understand it. If you're new to technical analysis, it's not going to be this, magic button that just tells you when to buy and sell. So you need to have the base foundation of technical analysis. And even if it was a magic buy sell button, you want to learn this stuff. Again, the goal here is not to make money in 2017. The goal is to establish yourself for the next 20, 30 years and have confidence to manage your money in any market, in any stock by using charts. You could put all of my money in the US dollar and I would be very comfortable. You could put it in anything, and if there's a chart, I will be very comfortable managing that money. I can't tell you the amount of freedom and ease that it grants you when you are confident visually looking at all of this price action and knowing whether you should be in or out of a trade. It just opens the world up in terms of, even if you are going to use a financial advisor in your future and have someone help you out, just keeping them in check and saying, why am I still in this position if it's forming lower highs and lower lows and is clearly in a downtrend now? Just having that base of knowledge, even if you only put in, an hour a week to studying, it adds up. And I promise you it will be a stress reliever in terms of having more confidence in what's going on in the financial worlds. I invested money into learning charts in terms of paying for charting services and things like that. Most of the research I did was through a mentor who answered my questions, and then a ton of extensive outside research on my own. So I come across the RSI, and then I read articles about the RSI. I watch videos on the RSI, and then I watch how other traders use it. And that's just was my process step by step for each indicator that I went through. And then I tried out some other chat rooms, and I actually tried out a chat room and was in it for a while. Started answering a lot of people's questions. The guy in the chat room didn't like me doing that because I was answering the kinds of questions that he would refer people to his courses to try and sell. We had a bit of a disagreement, so I left and said, I'm going to start a chat room that does all the things that I don't like what he does. So in his chat room, if you ask a question, and I'm not going to do names and do all that, but he would say, well, we go over that in this course, and you can find it there. Meanwhile, I'm sitting there thinking, I can answer this guy's question in less than 30 seconds, and you're getting mad at me for doing that because you want him to buy your course. So I said, all right, I'm going to make a chat room where you can ask anything, anytime, and I'm going to answer every single question that I can, just because that just felt way too shady for me to know that this question was a 3-sentence question answer, but trying to pawn off a $300 course on someone to answer that one question just didn't feel right. So took a lot of what I didn't like about this service that I used very briefly and created the Chart Guys platform in terms of how we do things in our chat room. So here comes a key test on Bitcoin, 11,450. Ethereum's key test, 467.97. And Litecoin's key test a little bit further from the break, 102.80. If I was not about to head out here in 15 minutes, I would probably be getting ready to initiate a position, although always checking where 5-minute RSIs are, so I could use this new 5-minute support of 11,265. Could zoom in for some more details. Ethereum has a new support of 464.75. And again, I would be cautious here. The two styles on these dumps that you're doing when you're trading on oversold bounces, you're either looking to lock in short-term gains and lock in that profit and be all cash, or you're looking to set a break-even stop loss to give yourself the potential to benefit from a V-shaped recovery and new all-time highs. Those are the two strategies, and you should have that strategy in your game plan. You can shift it a little bit once you see the size of the bounce and how it plays out, but you should have that in your mindset. Is this a short-term trade? Am I looking to lock in this profit and get a flip? Or am I setting my stop to break even and patiently waiting for the potential for continuation of this overall uptrend? I do use a stop loss and a stop buy in GDAX. I use the stop buy a lot less often, but I do use it. Best first indicator, RSI, and volume. Learning how to interpret volume. I would say market orders and limit orders are half and half. I've noticed recently in this bullish uptrend that my market orders have almost kicked off other people entering positions. So when they see a big volume spike, it recently I've been instantly profitable in my trade on market orders because a lot of other people follow along. And that's because I'm entering my market orders on a key resistance break, and then all the traders see that key resistance break and they buy in and run the price up a little bit more. I'll always try and do limit orders. Like for these oversold bounces, for examples, I'm scaling in on limit orders, and I use a market order if the bottom is hit and the bounce starts to play out, and then I'm scaling out with limit orders. So I'm trying to avoid the fees as much as possible. But again, I will never, ever not make a trade because it's a market order. And at this point, I've spent easily over $20,000 in fees on trading. But again, if the profit is significantly outweighing that, you know, if I can make a profit on a trade of $2,000 and my fee is going to be $500, but I have to use a market order to get in the trade, obviously it's worth it. You're making $1,500 profit minus the fee. If you are not comfortable with technical analysis and entries and exits, then it's going to be a little bit more difficult in terms of eating into your profit and things like that. So you want to be very confident and comfortable with technical analysis to be freely using market orders, because they do add up. These fees definitely add up. But as long as you're staying ahead of them in terms of your profit, it doesn't matter. TradingView does crypto. Yes, it's the best source in my opinion. I don't know why Bitfinex is not ideal. It has fake outs, it has big upper wicks and big lower wicks. I'm not a fan of using that chart, and I don't know the reason why it does that. So what Bitcoin is doing right now, if we consolidate and form a double top at 11,450, what that's going to do is make that much more clear of a level that when it breaks, all these traders are going to recognize, okay, we had a double top and it broke bullish. We're going to see some continuation. I bought Golem on Polo and then put it on a hard wallet. So we have a double top on Bitcoin, Ethereum's a double top, and Litecoin's a double top. Everything's a double top right now. So now we look for the 5-minute time frame. They have to form a higher low for Bitcoin and Ethereum and then break this double top for the bulls. All right, I am out of here. I appreciate everybody tuning in. We'll be back tomorrow as always. Still watching patiently for this consolidation and this bounce to play out. We should see a clear break sometime in the next hour or so. I hope you all have a good rest of your Sunday night. Check out the courses, the alert system, the free trial. Play safe out there. Use stop losses. And I will see you all soon.